Good morning. Welcome to CurrencyChange Daily Markets Update on Friday, the 15th of November 2013. My name is Laurent Guilbault, Managing Director at CurrencyChange.com, your low-cost solution to send your money abroad. The key event of the day will be the Eurozone CPI data this morning, which is coming out today at 10 o'clock UK time. In the US yesterday, the long-expected Yellen's testimony before the Senate Banking Committee did nothing to dispel impressions of her dovishness, and US short-end yields edged lower in response, helping to push the US dollar a little lower. In a light week for US data, today's releases will provide some further insight into how economic activity was affected in October during the shutdown, and a kind of basis for expectation for Q4 GDP. Today's October industrial production will give the first output reading for the month. The dollar rose from the lowest level in a week as investors wagered the Federal Reserve is still moving toward reducing its bond buying program after Chairman nominee Janet Yellen said it will not continue indefinitely. The US didn't buy or sell dollars to affect foreign exchange rate in the third quarter, the Federal Reserve Bank of New York said in a report to the Congress. In Europe, the ECB Council member, Mersch, speaks today, and the market will be looking for indications on the potential triggers for further easing after the comments from Super Mario Draghi and Pret in recent days indicating that the ECB remains prepared to take further action to fight against deflation. It still looks hard for euro-dollar to break again above the 135 level, given the dovish ECB stance at the moment. Such a move will probably only come from weak US data after the government shutdown in October, and nothing today really seems to be likely to generate that. Germany argued against a joint backstop for struggling euro area banks as European finance ministers renewed their debate on how to handle the cost of managing failed lenders. Eurozone governments must put in place ways to financially support their banks in case they need more capital. As a result of health check by the ECB next year, ECB Executive Board member Jörg Asmussen said last Friday. The euro area's nascent economic recovery lost momentum in the third quarter as growth in Germany slowed and France's economy unexpectedly or expectedly shrank. In UK, sterling held up well in spite of the weaker than expected UK retail sales data released yesterday, and sterling strength remained well justified medium-term by the improving UK growth picture and less dovish Bank of England stance seen with Mr. Carney. Even so, it seems unlikely at the moment that there will be sufficient news to trigger a break of the last month's ranges in sterling dollar or euro sterling, which were 158.50 to 162.60. And so on. And we see greater potential on the upside for a potential break if we go above 160, 120 on cable. In euro sterling, the 0.8350 level remained the major support if we drop, but in the absence of key indicators, it shouldn't be too volatile today. The pound was poised for a second weekly advance versus the dollar after the Bank of England signaled officials may increase interest rates sooner than later because people expected it to happen much later. Sterling rose for a third day against the euro after Governor Mark Carney said on November 13 that Britain has one of the strongest recoveries in the advanced world. Top ECB official Peter Pret said the central bank will take all measures necessary to fulfill inflation mandate, which could include negative interest rate or asset purchases, something to monitor. In Asia, a key level on dollar-yen was broken yesterday above the 100 level on dollar-yen, based on continued equity strength, even though this was based on expectation of continued easiness in Fed policy. While such expectation can be expected to sustain the equity market, in the absence of clear negative economic news, it is less clear that they provide a good reason for dollar-yen to go further higher. A more usual result will be all across yen strengths, particularly against high yielders. Unusually, high yielders have been weak in the last couple of weeks in spite of equity strengths, but there were a few signs of stabilization yesterday. We observed strength in the New Zealand dollar and the Australian dollar against the Japanese yen, and euro and Swiss franc may well resume from here. In terms of live exchange rates, sterling dollar, we are at 160.62, 0.1% higher than yesterday. Sterling euro, 119.35, 0.2% above yesterday. Sterling CAD, 168.30, stable. Sterling Australian dollar 172.18 stable. Sterling New Zealand dollar slightly lower 193.75 minus 0.2%. The economic agenda for today, UK time, at 10 o'clock we'll have the Eurozone CPI expected at 0.7% versus 1.1 last month. At 1:30 we'll have the US dollar import price, shouldn't move the market too much. 2:15, the key number of today, US dollar industrial production October, expected at 0.2%, and at 2:15, US dollar capacity utilization expected at 78.3%. If you require further information, please visit now CurrencyChange.com. You can open an account for free with us with no big exchange to exchange, or you can call on +44 027373 2686. Have a great weekend.